Hi, this is Vinod here and welcome to my channel. In this video, we'll look at why index investing is like momentum investing. Most of us start with index investing or holding index funds, and one of the most commonly heard in wisdom is that to start with index investing. Now in this video, we'll look at why index investing is successful and why it is similar to momentum investing. Now, there are a lot of indices like S&P 500 index, Nasdaq 100, ASX 200, Nifty 50. Like these are all indices that track the respective largest companies in the respective indices. Like now, what happens when any of the index, like for example, let's take the Nasdaq 100 index. What happens when it is rebalanced? Now, what happens is that some of these companies, when they get into the index, they continue to remain bigger, or they continue to get some of the companies in this index continue to become bigger, and some of them continue to become smaller. So in this case, what happens is that when it is rebalanced, companies that now are in the top 100 largest ones gets added into the index, and the companies that have become smaller and have gone beyond the 101 and 102, these are removed from index. So this is what happens when an index is rebalanced. So this is common among all the index rebalances, which can happen either on a quarterly basis or on a 6 monthly basis. So what happens is that at any point of time, the index is supposed to represent the largest X number of companies on that particular exchange or in that particular country. So this, when they are rebalanced, what happens is that the new entrance into the 100 largest gets into the index, while the companies that manage to get into the 100 largest ones, but then over a period of time have become smaller, then they are gradually removed from this index when they are rebalanced. Now, when you look at index, the index is actually tracking the momentum in market cap. So we are actually adding companies that are becoming bigger and bigger in terms of market cap. So there is a strong bias towards holding on only the survivors, and we remove companies that have become smaller. So what we are doing is that we are removing weakness. Now, this is one of the reasons why index investing is so successful. So there is a strong bias towards holding only survivors, and there is a strong bias towards removing weakness from our holdings. So this is one of the most important reasons, but most of the investors act in counterproductive ways. Let me explain this. So what they usually do is that they try to sell their winners too quickly, and while they try to hold the weakness or the losing trades more. So that this is one of the most reasons why most of the active investors as well as most of the retail investors do not beat the index. They take these irrational decisions because of their cognitive biases, and they are driven by their biases, which is usually resulting from system one thinking. Now we have looked at why index is so successful, because there is a strong bias towards holding only survivors, or at any point in time the index will always represent the largest companies in that particular exchange or in that particular in that country. And anything that gets into the index but over a period of time becomes smaller is gradually weeded out or is gradually removed and is replaced by new companies that are becoming bigger and bigger. So there is a strong bias towards companies that are getting bigger and they are surviving. If the continues to be big enough, it continues to remain in the index. However, if over a period of time it loses its market cap and it becomes weaker, it is removed from the index when the index is rebalanced. So this is one of the most important reasons why index investing is so successful. Now let me explain to you why index investing is like momentum investing. So what we are doing in momentum investing is that we are buying companies that are having a strong price momentum, and we ignore companies that have a weak momentum. So just like the index, the momentum investing is biased towards holding strength. We are always going to hold the most trending, the most moving stocks that are moving in the right direction. So the momentum can be either in the upward direction or in the downward direction. We are holding momentum stocks that are that are moving strongly in the upward direction, that are giving us good returns. And when the rebalancing happens in the momentum investing strategies, what we do is that we continue to hold strongly trending momentum stocks, and then we try to remove any stocks that have lost their momentum or their momentum has turned in the opposite direction. So this is one of the reasons. This is when you look at the core principles of index investing and momentum investing, you can see that they are both biased towards holding survivors, and they're biased towards holding strong trending and strong momentum stocks. So this is this is the main reason why index investing is similar to momentum investing. So when you remove all other things and look at the core concept from a point of view, both these strategies are strongly biased towards holding strength and selling weakness. So in this video, we looked at why index investing is so successful and why index investing is also very similar to momentum investing. Hope you found some value in this video. Please do subscribe to this channel for more content on investing, trading, and behavioral finance. Thank you.